Hi, this is Acme with the Bulletin Board Heroes here at Vox Markets for Monday, the 21st of February. Starting off with Afritin, where things seem to be on the move after an extended consolidation of, I suppose, the best part of a year. We've broken above the initial 2022 resistance at 6 3/4. Above that, we had a target of 8 pence, but breaking 8 pence, which looks as though it could be done by the end of the week. We've got a top of April 2020 price channel as high as target as high as 12.5 pence, which could be hit over the next or the following 1 to 2 months after 8 pence is broken. Only back below 6 pence in the floor of the channel, really delaying or questioning the ongoing upside argument. The other point to note, I suppose, is the bullish divergence line here since June, and normally the third major test of that is the buy point, which we had, I suppose, around the 5 pence level back at the beginning of December. So something to note there for technical fans. Moving along to a stock which has a bit of a buzz to it at the moment, ARC Minerals. Here you can see that the shares have managed to break back after the testing the floor of the flag, I suppose you call that, around 3 pence. Support coming in above the 50-day moving average at 2 3/4, but at least while we're above the 50-day line, looking for the top of that rising trend channel from July as high as 6 pence, perhaps as soon as the end of April or even sooner. Depends how we go with this little battle with the 200-day moving average at around 3 3/4 pence. But at least while we're above 3, looking pretty set fair for ARC at the moment. Stock which continues to impress in terms of its recovery is Cobra, and here we've hit, it's always nice to see when we've hit a target which initially seemed rather high or pie in the sky perhaps sometimes. Top of that broadening triangle from April up to 3 pence, and we've hit that today. All that's left to do now is maybe check and work out what the next level up may be. This stage probably looking for that resistance line from October to be hit at around the 4 3/4 pence level, and maybe we could hit that as soon as the end of next month. The good news here is that we've got both the 50 and 200-day moving averages rising. The run up to that tends to be the strongest part in the cycle, so the end of next month is achievable in terms of 4 3/4 pence on Cobra at the moment. In terms of the stop loss, probably back below 2.5 if you can afford that, would be the place to have that particular money management point. On to Cizzle, where I think there's been some stake building. Some resistance around the 3.3 pence level, so really looking for that to be broken on an end of day or a weekly close basis to give us the top of November triangle target as high as 5 pence by the end of next month, hopefully at this stage. Moving along to Cloudbreak, which is another stock which has hit the targets. The initial one here was 5 pence, which seemed to be rather ambitious when we were really around 2.5, but we've already had the next target set up there, that line of resistance from June, and that's currently pointing it up to as high as 9 pence by the end of next month. Upside valid while we hold above 5. Which was the initial February resistance for the shares. Also looks like this is going to go into a golden cross, and that would be a pretty good look for the stock. Stock which hasn't been doing too well over much of the recent past is Mast, but just the signs here that there's going to be a turnaround. What we need to do though is break 6.4 pence on an end of day or a weekly close basis. If we can do that, the next level up might be January resistance around the 9 pence level by the end of next month. Interesting that we've had a very oversold RSI there, sub 10, I think, for the, well, actually it's around 0, in fact, so completely bombed out. So there should be some pent-up demand there in terms of people trying to cover their shorts or going long on a potential turnaround. Bit of a buzz with Oxford at the moment. Here we've got the shares bouncing off the floor of this rising trend channel from back in October. Floor of the channel there around 2.1 pence above that. Looking as though we could head up to the top of the channel as high as 3.1 pence over the next 4 to 6 weeks. And interestingly enough, I suppose this is the third test of the uptrend line in the RSI window. So RSI lovers might regard this as a decent trigger for a fresh leg to the upside. Stock which has been disappointing, but maybe back in business now. Chance with the Poolbeg bouncing off this falling line of resistance from back in October in the RSI window. Also, there's a support line projection from back in September around the just above the 5 pence level and above 5 pence. Got the chance of at least a rebound to maybe 6.5 to 7 pence initially, which was the support on the way down. Best case scenario at this stage above 5 is up to 8 pence, which is that September resistance line at the top of that broadening channel from back in the autumn. Moving along to a stock which has kept on delivering for the bulls in the recent past, especially with the decent news flow. We managed to hit our £1.20 target, and above that looking for a target as high as £1.90 over the next 1 to 2 months, which seems a bit ambitious at the moment, but the shares have kept on delivering. And also the start of this move was an unfilled gap to the upside, which tends to be a decent momentum signal for a stock or a market. Haven't covered pure gold for quite a while, the reason being that it's been in a horrible descending pattern, but today seems to be the day that's, the start of this week seems to be the day where we're breaking that neckline resistance around 44 pence. Above that, on an end of day close basis, we should head up towards the 200-day moving average and post-November resistance 60 pence, maybe as soon as the end of next month. We had that third bounce off the bullish divergence line there, almost at the lows, and we also had a gap close signal as well near the lows at 34 pence. So I have to say I've been a bit slow on this one, but as you can see, it didn't seem to be a situation where you wanted to be looking north on a rushed basis. Probably better to wait and see how it panned out, and it's panned out reasonably well. Moving along to Rambler, which had an update today. Here you can see that we closed the gap down, that we had bear trap gap reversal that we had at the beginning of the month, and now well above that level at 30 pence, or 30.5 pence. Above that, looking for as high as 55 pence at the top of the rising July trend channel, and probably more optimistic about that now, given the way that we've had the gap close and the bear trap to start the month, so looking more encouraging there. Finishing off with Serinus, which is trying to join its fellow oilers in a better pattern at the moment. Here we've broken neckline resistance around the 1.7 pence level, and above that looking for at least a retest of January resistance at 2.2. Big picture target maybe by the end of April or before, up to the broadening triangle from back in August. So looking more interesting there for Serinus at the moment, especially while we remain above the rising 50-day moving average. That's normally quite a telling sign when a stock is near its low. So that does suggest that bullishness is coming in there at the moment. That's it from me today. More updates tomorrow.